this with the Gold and Silver Club, presented by myself, Phil Carr, for the 23rd of March 2017. So welcome everyone. Today's session will be covering live market analysis. We will be going through a watch list of trading opportunities, a forecast of where we expect gold, silver and oil also to be heading next. We'll be answering questions, providing live support, and of course we will cover also our top trade over the last week as well. Just before we get started, let me introduce you to the Gold and Silver Club. The Gold and Silver Club is the #1 commodities trading and investment coaching company. We are regarded as the go-to authority on commodities trading, as internationally respected experts. Our analysis and our opinions on the metals, the energies and the agricultural markets, they're routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal, and of course, it's a pleasure to be here on FX Street as well. Our team of experts has trained and mentored over 100,000 private traders all over the world to increase their wealth and to generate a substantial income through commodities using our exclusive research-driven strategies. For more information on the Gold and Silver Club and our expertise, please visit our website, which is www.thegoldensilverclub.com. Okay, brilliant. So before we get into it, before we go over to the charts, I just want to quickly cover with you where we are at now year to date in terms of the performance of the markets, just to give you an idea, bird's eye view of the markets in terms of the performance in 2017. So first of all, if we have a look across the board, you can see here the green versus the red. The best performing market so far this year at this point is Palladium. So Palladium is currently up over 16%. We've in fact seen quite a decent move on both silver and gold over the last week, following on from last week's FOMC statement. Silver is now trading just under 10%. In 2017, up 9.77%, and gold here is up just over 8% in 2017. We've also seen a movement to the upside in platinum, over 6%, and currently we're sitting with the Dow Jones up over 4.7%, S&P 500 up over 5%. In terms of the worst performing markets over this year, that has included natural gas, which is down over 21%, heating oil, which is down under 14%, WTI crude oil, which is down just under 13% at the moment, and Brent crude oil down 11%. And overall, the way that we've positioned our portfolio at the moment is we're taking advantage in weakness in oil right now, and we're also taking advantage of strength in gold and silver and a number of other of the metals as well right now. Palladium, there's some good opportunities too. And that's what I want to explore with you today at the moment. The overall trends that we've got right now, particularly the upward trends that we've got in the precious metals and the weakness that we've seen in oil since it broke down significantly approximately about 2 weeks ago, when we finally had a resolution after oil had been consolidating for over 3 months. And this just gives you a good idea of what the overall major trends are in the market at the moment and how you can really capitalize on that. So what we'll do, we'll move over to the charts here. We'll move over to the technicals. First of all, we can move it over and we'll have a look at gold. In fact, this is gold on the raw chart. I'll bring you out to all my technicals as well, just so you can see exactly what is happening right now. So gold overall, gold is at quite a major, it's at a big decision point today. Now, a couple of reasons for that. Now, first off, just to set the scene, we have an open position on gold at the moment, which we've had since last week's FOMC statement at $1,212 per ounce. We've taken some partial profits over the course of this week. Overall, the overall trade has been moved to a position where it's a risk-free position now. We want to give this some room to see if it can go on for a full-on breakout above this major overhead level of resistance. You can see here very clearly a V-shaped reversal pattern is in development. The 200-day moving average is not too far away. We're not too far away from the February highs here as well. So a few points to note right now in respect to gold, and you can see it's chopping about at the moment. We've broken again over the last weekly highs and also the daily highs today. In fact, where we're poised at the moment with a recent surge we've just seen is the highest level since the end of February here. So we are starting to get very close to potentially taking out that previous high. Now, we are coming up to a major overhead level of resistance. So if you go back on your chart, for everybody who trades gold, go back and have a look at the resistance point from Brexit. I'm sure you've already got this on your chart. If not, it's worth adding on. So this overhead trend channel, which takes into account the swing highs, also the high that we've reached over the course of the US elections, and of course the more recent swing high as well. This is where gold is battling at the moment. This is battleground today. Reason I say that is because if gold can close above this trend channel today, and if we can get a higher close than yesterday, that would bode well for additional momentum as we go into next week. And of course, we've also got Article 50 being triggered next week as well, which could certainly cause some volatility. And we all know Brexit, what happened on Brexit, 1,000-point move on gold in one day off the back of Brexit. But we want to see whether gold is going to get additional inflows now between now and Article 50. And as such, we are keeping our open position running right now, but we're also flexible to close this in the possibility that this is it for the move at the moment. We're definitely at a decision point right now. If gold can hold above this level, ideally a higher close than yesterday would be better. We've already got a higher high and a higher low, but I'd like to see a higher close in order to hold this gold position right now. If it holds and we can see a high close today, essentially higher than the previous day's closes. Since the FOMC statement, we've got higher closes every single day here. So you can see here we've got 5 days of consecutive higher closes. It's been a very good move. We've seen a 500-point rally to the upside for gold since the FOMC statement. And in fact, if you go down to the lows prior to that, it's actually been more than that. It's about a $60 move for gold, or 600-point move. And that's really good going for gold, considering it had a 50% retracement just prior to that statement. So what else do we need to look at to give us clues here as to whether gold is going to catch fire and break above the previous day, the previous swing high here? By the way, if we do that, I could really see additional momentum to the upside here for gold. We could really start to see a lot of buy orders get filled, especially for a break above that previous swing high, the 200 MA as well. We could, especially a close above the 200-day moving average. That is where gold will really start to gain momentum to the upside. Now, if we move over to the correlations, what else do we need to bear in mind right now? So US dollar index, how's that looking at the moment? We'll go over to the weekly chart. Essentially, I do see the potential here for a head and shoulder pattern developing here on the weekly chart for the US dollar. Left shoulder, head, right shoulder, and you can see we're sitting around 99.54 at the moment. I'm looking at 99.25 zone to be taken out. The previous swing low, and in fact a little bit lower than that, approximately 99.20, also on a closing basis. If the US dollar takes that level out, and it is possible, if it can take that level out, then certainly if it closes below that level, I see really the door opening up for significantly lower prices on the US dollar index. Initially, I would look for a retest of this underlying trend channel. You've got almost parallel channels here at the moment on the US dollar. If it's ricocheting between these levels, you've got the 200-day moving average, which sits below approximately 98.50. And there's clean air really for a breakdown if we then take out the swing low here on the chart around the 99.20 level, which we're not too far away from at the moment. If we get that breakdown in price for the US dollar, then yes, I see the potential for gold to accelerate to the upside, silver as well. And essentially, we'll keep our long position open and we'll keep continuing to increase our take profit target on that market as we continue to trail that take profit target as the price keeps going up, closing higher each day. So overall, gold right now, big decision point at this point in time. It's followed through really well since last Wednesday's FOMC statement. Those of you who were on last week's session, you will note that we've been long gold now. We've got long prior to the FOMC, well, actually on the FOMC statement, on the actual announcement, we got long at 12.12. We're maintaining that position at the moment. We're in over about 410 points profit just about half an hour before this session today, and it's moving well right now. At the moment, we've got a few important closes to look out for today. US dollar index, definitely gold, and also gold euro is a good market to watch. If you trade gold versus the US dollar, gold euro can be a very key indicator, particularly either it gives you a good heads up when to get into gold. So often give you the trigger. It will confirm before gold US dollar, before the US dollar gold does for a buy. It will also confirm that you should exit a trade before gold versus the US dollar as well. So this is gold versus the euro. And if you have a look at it right now, we've actually breached above the 200-day moving average today. We've so far been developing higher highs here. In fact, earlier on this week, we saw a pullback. We came back towards, this was on Tuesday. It was looking a bit ropey on Tuesday. It pulled back towards the 300 MA, found support, managed to form a dragonfly doji into the close. So very clearly, buyers are getting in on the pullback, closed near the daily highs, followed through yesterday, hit the 200-day moving average. We've already cleared above that today. We've got a bit of a doji forming, but I see a lot of clean air here. This, for me, is a V-shaped reversal pattern, neckline at the monthly pivot. We break that, we're up and running on gold versus the euro, and then gold US dollar should catch fire, accelerate, and we could really see a lot more momentum. And that's what I would, in an ideal scenario for our positioning of the market right now, I would like to see that happen. If it doesn't happen, not too fast, we'll close our position. We'll potentially look to reverse position as well, but it would depend. We might well wait for Article 50 to get that out of the way next week before adding more positions onto gold. At the moment, we remain in our long position. So I hope that just gives you a bit of clarity on our overall positioning with gold, what we're looking at with the US dollar index, correlation, especially if the US dollar index was to break down. Gold at the moment, it's holding up pretty well. If it can close above 1250, that would be even better there. Yesterday closed at 1248. If it can close above 1250, it opens up the door here, breaks, especially if it closes above this overhead trend channel. I could really see gold then building up momentum to the upside and then start to accelerate. Now, in terms of oil, let's move it over to oil, another market which has got good day-to-day movement. Now, we're in a short position on oil at the moment. In fact, that has started to really move well over the last about 2 hours or so. We started to see this break back down again. Had a lot of questions actually on our live trading room that we conducted this morning for the Gold and Silver Club, because of this rejection candle that formed on the daily was causing a little bit of confusion for some traders as to why that occurred. But overall, there's so much overhead resistance on oil at the moment, and you can see, I mean, these channels which we've gone over during our live trading room this morning have already started to play out in terms of resistance. You can see we're starting to break back down again. We also had a lower high, lower low yesterday. We breached below the previous low here, so the swing low where we saw last week. A bit of a retracement, came up to major overhead resistance here, but now we're selling off again. There's so much resistance overhead, 200-day moving average pivots, overhead resistance trend channel as well. We've actually added to our sell short on this retracement this morning because we've got another confirmation on lower time frames here. Yet again, we've broken down and we've just added to our sell short on oil. So essentially, we've got a profitable sell short on oil at the moment, and we will continue to maintain that. Our view at the moment remains bearish on oil right now. We're looking for more downside on this market. You can see, in fact, it's coming back down again to retest the 47.60 zone right now. Not too convinced by this big rejection candle. You can see overall rolling over from our indicator, which shows you overbought, oversold condition. Have come up to resistance in the overbought condition. We're rolling back over again. So essentially, I'm looking here for oil to roll over, break back down, and take out yesterday's low, and essentially get back, first of all, of course, towards 47 US dollars per barrel. Then ultimately, in the short term, I'm looking for a move down to 46, but I might keep extending that take profit target depending on how this move plays out. On a weekly basis here, we do have a big, large underlying trend channel going all the way back to 2016, which has been supportive, but if it gets taken out this week, then we could really start to accelerate to the downside here. We could start to see a lot more margin calls for traders who maintain long positions. More traders will start to get stopped out of their buy positions from the commitment of traders data. There's still quite large net long positions in this market. And if we can continue to see a breakdown in price for oil here, that will start to put stress on those buy positions in the market. And probably either those will start getting closed out, we'll see a liquidation, or positions we might see margin calls, and more traders get forced out of this trade, traders who are long at the moment, especially if we break below and close below this underlying trend channel on the weekly chart. So right now, I don't see any reason to change our overall view. We're short oil right now. Momentum is on our side to the downside. Yesterday's move so far anyway hasn't really followed through. We've got too much overhead resistance. We've got a couple more days of closes below the 200-day moving average starting to roll over. It's just a retracement higher, and it looks like we're just going to get a staircase sell off here. So maintaining our sell short position on oil. We caught this move as well. A lot of you who follow our analysis on these weekly reports here every Thursday will be aware that we've been overall, our position has been bearish throughout this consolidation. We caught the whole move when we broke down 325-point move. We caught just within over 24 hours once this support finally gave way, and we closed the position now, and now we're back in again for the next sell short here. Currently the trade is in profit. We'll see how this closes out the day, but our overall stance right now is bullish gold, and we're bearish oil essentially. And if we go over and have a look also at silver is actually worth having on the radar today. I say that because of where we're sat. It's just a risk to reward tool here, just showing you what we're looking at in terms of potential follow through here. What's important about silver is the 50-day moving average, and it has been below the 50-day moving average since it corrected, came back down to the 61.8 Fibonacci retracement zone, just above that level, and it's built up a base since the FOMC statement. Much like gold, also silver is holding on to its swing low. Had a big pop on the FOMC statement. The follow through was much better on gold than silver. Gold was definitely the better market to be in. It's moved over $50 move since it broke out from the 12-12 zone. So it's been quite a reasonable move, and over a $60 move in terms of gold in US dollars. It's moved since it put in a low prior to last week's FOMC statement. But I would keep an eye on silver here, because if silver can build up some momentum, if it closes above the 50-day moving average here, there are a lot of traders who look at this closing basis above a 50 MA on silver. And if you want to go back and check that, go back. I've outlined these levels in 2016 on the pullbacks, okay? And you will note when we break back below the 50 MA, once we get a positive close back above it, this is often where the price really builds up momentum. We start to see buyers come back in, especially on a closing basis. So you can see here, going back to end of January, when we finally got a close above the 50 MA, this is where we really started to see acceleration to the upside. Also back in April of 2016, we got a really big inflow into silver after a close above the 50 MA. Was the same case going back to June of last year. But I would note this is normally coming off the back of a oversold condition, okay? So where it's pulled back and then got supported, then it gets back above the 50 MA, and then that's really where you can start to see these considerable breakouts. What you don't want to do is you don't want to be getting into these 50 MA breakouts when silver is overbought. So where it's coming off this is what happened after Brexit last year. Silver is getting overbought, and then these crosses above the 50 MA were false signals because it was already well overstretched in terms of its price. At that point, it was up about 35% on the year already at that point in time. But where we're sat now, we're coming off the back of a 61.8 correction here, following on from the February highs down to the December lows from December FOMC statement up until the highs recently. 61.8 correction. Now we're building up momentum above the 50 MA. I would suggest again today is very important, because if we close above the 50-day moving average, that in my opinion gives confirmation for a lot of traders to get long now silver, especially if we also see gold pick up momentum to the upside as well. So I'm watching silver for the close today, and really there is quite a lot of clean air here for silver. It's not got too much in the way of, first of all, I would see a trade opportunity up to about $18 from 17.63 where we are right now, so about a 35 cents move, and above that we'll test the 200-day moving average. But above that zone I could see additional follow through and breakout, retest the swing highs of February here, which would be around $18 and about 50 cents per ounce. Just below that, and of course if we take that level out, then we are really going to see this market explode to the upside. So I think this is worth having on your radar at the moment. I'm still waiting for confirmation. I want to see if we can close above the 50 MA into the close today. I'm watching gold very carefully as well to see if it can build up momentum. You can see there's going to be a battle today, but I like it. The price structure I'm seeing right now, 12.49. If it closes towards the daily highs, closes with a higher high, even if it closed where it is right now at 12.49, that's still another higher close here, higher high, higher low, and the potential to follow through again tomorrow and as we go into next week as well. We can have a look at gold on a weekly basis here. There's that trend channel, that really important channel, which if gold can breach it, close above it, it really sets the stage here for much higher prices for gold. So gold is at a decision point. Would I sell gold here? Would I look to sell this position? I know some traders are starting to hedge a position, a long position. They're taking advantage of this retracement up to the overall upper end of the trend channel here. I would wait for confirmation. I don't believe that we have confirmation to sell gold at this point. Getting into it on an aggressive instant execution sell right now is pretty risky, in my opinion, coming into Article 50 next week, and especially given that we don't really have any sort of confirmation to sell into this market. Possibly, yes, if we break below yesterday's low or lower close, or some sort of bearish signal rejection candle around this zone could indicate that, okay, gold's not going, it's going to create a lower high and it's going to correct lower, and you've got a good risk reward. But we don't really have that confirmation yet. So I would wait, see what happens. Essentially, these are the major alternatives I'm looking at. This is a decision point where we're either going to accelerate or we're going to turn lower from this point, but we need to keep watching it. So today, interesting day. It's going to be very interesting to see how gold closes today. We maintain our buy position on this market. We maintain sell positions in oil right now, which is starting to pick up momentum to the downside as well. Also, just to put on your radar what we're seeing right now with palladium and platinum. Palladium is worth noting, okay, it's broken out to 18-month highs. In fact, it's done this throughout most of the last couple of hours or so. We've just seen a pop higher. So palladium is already leading here. Remember, palladium is the best performing market in 2017 here, and it's already broken through the $800 level, $800 per ounce. So that's very important. We need to look at the correlations. Palladium leading the metals at the moment. So bear in mind what is happening here. If we see this follow through also with gold and silver, we might see just a bit of a delayed reaction here, particularly with silver, which has been quite muted. But silver, it tends to have these days where it will just have a consolidation pattern, and then suddenly within a day it will really explode to the upside. And I'm keeping an eye on that. Alerts ready to go on silver in case it does that. So just have that on your radar. Okay, make sure you're aware of that as well. Okay, fantastic. So with that, that really just gives you a snapshot, guys, of what we're looking at the moment in terms of gold, silver, oil right now, and also the US dollar index, gold versus the euro, the correlations that we're looking for in those markets. If you did enjoy today's analysis and you want more of this analysis on a regular basis, if you want to join our live trading rooms during the week, if you would like to know the exact entry, exit, take profit levels of every single trade that we take at the Gold and Silver Club, get access to our private members academy, get access to mentors as well, all you need to do is go to www.jointhegoldandsilverclub.com, complete the application form, and we will of course get in touch with you ASAP. So if you liked the analysis today, you want more of this on a regular basis during the week, at weekends, as we prepare all of our traders for the week ahead, absolutely, we'd love to work with you. Look forward to those of you who will be making an application. Now, just to talk you through our top trade over the last week using the Gold and Silver Club research-driven strategies. Now, our top trade this week remains gold, which we're managing at the moment, up 410 points profit just prior to this session today. And that remains our open position, which we're looking to see if we will be able to now break above major resistance and see if we can get some more follow through here. So we're looking to take advantage of a potential wave higher here on gold. We just need a bit more confirmation. So our open position on gold currently at 410 points profit. And again, if you would like access to, as well as our live trading rooms, the trade setups that we send out to all of our traders, each entry, exit, take profit, trade management, every single day, you can gain access to that at the Gold and Silver Club. You get access to our live trading room webinars during the week, which are also recorded. If you miss a session, you can also watch the recording. We go through all of our analysis in a lot more detail, trade notifications via email and SMS, so you don't miss out on any trades. That's all real time sent over to you on your mobile phone and email. And you get access to all of our commodity research and market insights. So all the background, all the fundamentals and research we're doing in the background to give the trades a higher win rate. Okay, you can get access to all of that via the Gold and Silver Club. So our weekly live trial trading rooms during the course of the week, and also our weekly live trading room recording for the following week. You get access to our trade setups during the week, real-time notifications, email, SMS, details of where we're entering, exiting, place a stop loss, a trade watch list for the week ahead, and a trading plan every single weekend for the following week, live trade support, mentors that you have access to at the Gold and Silver Club, and institutional level trading research and commodity insights. So again, guys, all you need to do is go to www.jointhegoldandsilverclub.com, make an application, and we will get in touch with you ASAP. Okay, fantastic. So with that, guys, I wish you very profitable trading. Have a fantastic day. Thanks again to FX Street for putting on today's session. We'll speak to you all real soon. And of course, very much look forward to hearing from those of you who will be making an application to join us at the Gold and Silver Club. Okay, thanks, guys. Take care. Have a fantastic one. Bye-bye.